Ladies and gentlemen, welcome to today's web seminar, which is appropriately entitled, Not Your Average Check Fraud Webinar. My name is Mike Perkowski, and I am glad to be the moderator for today's program. We're glad that you could take some time out of your busy day to learn more about this topic, which is brought to you under sponsorship from Unit21. We want to thank them for their support of today's program. This is an important topic, as I think everybody would understand, because we all know that the issue of check fraud has evolved significantly in recent years. It presents new challenges for financial institutions that had not been seen previously. While the daily use of checks has declined, check fraud, unfortunately, has surged. In today's webinar, we're going to have some industry experts talk about the latest trends and insights on check fraud, including the impact of mail theft on check fraud and the emerging threats from the dark web and Telegram. There's great insight here, and we're fortunate to have three speakers. I'm going to introduce them in a minute, but I want to give you a little bit of a taste of what you can expect today. After I introduce the panelists, we're going to get started by, of course, setting the stage with the state of check fraud today. Then we're going to segue into a discussion on the dark web and Telegram, which of course are hotbeds for check fraud activity. We're going to talk a little bit about what's going on in the area of mail theft. And then we're going to take some questions from the audience, from our experts. We'll dive into these topics. And then, of course, we have to have the obligatory commercial, but we're going to keep that to a minimum. We do want to make sure this is a thought leadership piece and one that gives you great insight about this topic. So fortunately today we have three speakers who are going to cover our topic today. Tyler Pihl is Vice President for Enterprise Risk at Service Credit Union. Dr. David Maimon is the Head of Fraud Insights at SentiLink and also a professor at Georgia State University. And then Ian Macallister, who's the Chief Operating Officer of Unit21. So as I said, three expert speakers. They know a lot about this topic. Let's get started. I'm going to turn the program over to Ian Macallister to get us started.
Thanks for hosting us today for American Banker. Yeah, like you said, Ian Macallister here. I'm also have the pleasure to have Tyler and David join me. So excited to talk about some of the trends going on with check fraud. Check fraud. Everyone says it's a dying medium for payments, but it certainly continues to rise from a risk standpoint for the industry. So we're going to dig in a little bit. We're going to talk about some numbers, what's going on, and we'll go through some videos too to see how people are actually perpetrating some check fraud, which would be good because I'd love to hear from Tyler's perspective and David's perspective, like what they're seeing in the industry and kind of how they're protecting their own companies and other companies against it. So let's just jump in. First of all, I'm just going to go through some stats. What's been going on recently in the last 5 years? FinCEN's reported that check fraud has more or less tripled in the last 5 years. In 2024, as though the trend continues. And the U.S. seems, although you hear about real-time payments being pushed out, we're a little bit antiquated from a check standpoint. I feel like all these people are in front of me in the checkout stand at every time I go to the grocery store. But we continue to lead the world in a lot of different things, including check writing per capita, which is great. We also, have recently seen check fraud reach over 24 billion this year, which is kind of incredible since like the usage of check is going down, but the fraud's going up. And then, more or less they're saying like these check fraud continues to be the payment method that has the highest risk. And so, like I said, the transactions are going down, but the losses are going up. And then, we just continue to see that. We're going to talk a little bit about mail fraud, but the theft of checks and the fraud associated with it continues to rise. But, before I go to the next slide, anything, David or Tyler, that kind of pops out in your mind of what you're seeing? Like, are these trends consistent with what you're seeing in the industry? And also like, anything that you'd add to it? So maybe David, I'll start with you.
Yeah, I mean, in terms of what we're seeing on the side of mail theft. I think that the stats that is reported here is quite in line with what we've reported and seen starting 2020. One of the interesting things that I can share is that, unfortunately, we don't see at this point any reduction, right, in the volume of mail theft, at least as we recorded on some of the social media platforms the criminals use in order to brag about their activities, as well as sell and purchase stolen commodity, which comes from the mail.
That's interesting. I mean, the 2020 trend is obviously the COVID relief funds, right? Like that's what you see, but you're seeing the trend continues. That's actually really interesting.
Well, so to tell the truth, I mean, since 2020, I would say the trend intensified a little bit. So,
Yeah.
Based on our stats, the trend intensified between 2020 till 2023. We're not really sure what's going on right now. I mean, according to our numbers, we still see a lot of stolen checks out there. A lot of people brag about they're targeting mail carriers and USPS mailboxes. So I don't have any reason to believe that this trend is going down at this point.
I think that's a little foreshadowing for some of the slides we're going to show later. Tyler, what are you seeing? Like anything popping out to you?
Yeah, I mean, you mentioned that, what's interesting is we're the highest per capita use of checks, and we tend to lag in the payment space. And I think that that's a direct correlation to that trend, right? I mean, you look at instant payments, and we're oftentimes slower than other countries in introducing those technologies. And I think this is a good representation of why that is. Checks remain prevalent, and it becomes easier and easier to become a fraudster and utilize that channel. And when there's success through channels, right, it attracts more people. And I think that's what we're seeing in this space, and we'll continue to see for a while now.
Yeah, that's great. Interestingly enough, there's a little bit of credit to Gary Warner, who came up with kind of this idea of looking at per capita by state. And we updated these to look at 2024, the recent trends. And so this is effectively like looking at the hotspots of which states have just like higher check fraud per person that lives in the state. And, what's going on with Delaware and South Dakota? I mean, David, any thoughts there?
Yeah, I mean, so we've been recording this for a while, right? Starting 2021, we've been keeping track on a monthly basis on the number of checks we're able to find across the United States. And the way we figure out where the checks are coming from is simply by looking at the address that the fraudsters feel comfortable sharing with potential customers. So we're aggregating things and then producing a very similar map on a monthly basis, pretty much. And what you're seeing on the slide right now is a snapshot of the hotspots of check fraud and check theft between January and April 2024. We were able to sort of record things on a monthly basis starting 2021. And the sad thing, I would say, is that the East Coast, over the 3 years period of time, has always been very high on number of checks that we were able to find. You're asking why South Dakota and Ohio. I mean, there are other places, of course. And again, the snapshot we're looking at right now is of 4 months only. I mean, if you look at 3 years worth of data, then you'll see that the patterns are still consistent. Maybe South Dakota is not that high earlier to this phenomena, but the rest of the states are still very high. We believe that what's going on, and this is based on some of the research we conducted, is that there's high correlation between attacks against mail carriers and the number of stolen and forged checks we find in those locations. In fact, we were able to take some data posted by USPS about attacks against mail carrier between 2020 and 2022 and the locations those attacks occurred in. We were able to take a lot of the data we were able to collect between 2021 and 2023 and sort of correlate it with the volume of attacks. And what we found is very high and positive correlation. And essentially, that's what you're seeing there. I mean, it's high correlation between attacks against mail carrier. Criminals are essentially trying to take the arrow keys from the mail carriers and then steal the mail, and which results in a very high volume of stolen checks in those areas. The other very important thing that is important to mention is that those areas, especially in the East Coast, most of the locations we're seeing on the map right now are hotbeds of gang activity, and so that is what that is the reason for what we're seeing right now on the screen.
Gotcha. I think I need to hire more people in South Dakota to sell check fraud services. And it's also interesting, like the West Coast, like you mentioned, like East Coast has like a high hotspot rate, and the West Coast is a little less. I think a lot of people look at California. I mean, I'm based in California, and I think the volume is obviously very high because there's a lot of residents, but just the per capita is just lower, which is interesting. Tyler, you're in the Northeast, so like you can help us protect. You're great. You're good. You're not so hot. So appreciate what you're doing up there. We'll get into it. But any thoughts?
Yeah, cool. Yeah, I mean, looking at I don't like being on the East Coast, given I look at this and that's terrifying. But I also think the diversity of the states, it's really hard to pursue some of the criminal activity, even if you're working with law enforcement. Jurisdiction becomes a nightmare, right? So I look at that, and having 3 states kind of cover the West Coast, I don't know if it contributes to it, but that's where my mind goes in pursuing, legal activity against criminals. When you are able to identify it, it becomes really difficult.
Interesting. Well, cool. Well, listen, appreciate it. So we're gonna jump in a little bit to some of the insights that we have around kind of fraud activity. We're gonna look at some things that we've pulled from the dark web and Telegram, and I'd love to get your guys' response to this. So first of all, we looked at Telegram and started pulling some terms just to like level set on what are some of the terms that people use when they think about perpetrating check fraud. And so we built a little bit of a glossary here, and I'd love to dig into some of these terms, but also get your guys' perspective on it. A couple that I just flag, I like Dusty. It's an aged account. Need Dusty Chase for Monday, more or less an account that they can use for perpetrating fraud. To lab, like it's a verb, so to counterfeit a check. I'm so hip here talking about this stuff. I know I sound great. And then the grits are more or less a failed fraud attempt. Your accounts are grits. You dropped bad food. So I'm right in the middle of understanding and listening to these terms. But Tyler, from your standpoint, like, have you heard about do you hear these terms within the 4 walls of your institution? And like, how important is it to keep your team updated on just like what are the terms being used just so that they can identify fraud?
Yeah, I'll be honest, I had to look some of these ones up. I don't feel like we hear a lot of it. I mean, we definitely see the downstream effects of it, and we absolutely, like, checks have been ramping up and they continue to be used through every avenue that's possible. But do we really get to hear a lot of this stuff? No, right? Even when people are going into our branches and trying to utilize that network, we don't hear the slang, right? I think there's a lot of power in understanding it, but it doesn't really hit our worlds from an actual, like, we're not hearing this in the course of business, right? I think we need to be familiar with it and understanding the brevity of the situation, just like how vast it is really important. But a lot of this terminology I honestly didn't hear, so that was interesting. I learned something.
There you go. And David, from your standpoint, like, you do a lot of research, right? So like, how prevalent are these terms in your research? How prevalent is it in social, like, how do you think about social media perpetrating kind of a lot of the check fraud from your standpoint?
Well, this is our bread and butter, so to speaking. So, we have to be familiar with the jargon. We have to be familiar with the slang and the unique terms folks are using in order to identify things they don't want law enforcement and fraud fighters to be aware of. And so, in this sense, huge shout out to Eric Huber, who put together this fraudster glossary. I remember meeting with Eric when he first started his current position, and we were talking about different ways to approach the issue of check fraud, and so we discussed a little bit the glossary, and I'm so happy he put it together and made it available to folks to sort of get familiarized with some of the slang, because these words that you're seeing on the screen right now and many more are key to fraud preventing and fraud fighters out there who are trying to gather some intelligence in order to prevent and mitigate the consequences of fraud. So, you know, unfortunately or unfortunately, I don't know how you want to, treat it. This is our bread and butter, and you know, we love the slang. We use the slang on a daily basis, less among ourselves, but in order to find what the criminals are putting out there.
That sounds, yeah, I think that's great. And it's great shout out to Eric Huber there. Appreciate you doing that. Well, let's jump into a couple of some of the scenarios of like how people actually create fraudulent checks. So first of all, we're gonna go through kind of three. One is the washing, so effectively like altering the check with chemicals. In this scenario, you know, somebody's using, you know, brake fluid and heat to do so. I'm gonna actually kind of jump through and show a couple of videos too. The next one is, let's see, let's kick this one off. So this is somebody sitting in front of a check cashing shop with a micker printer and more or less cooking a check right before they go in, which is kind of funny to watch, a little short video. The next one is somebody, there you go. Yeah, so these are like hilarious. So this is like people getting access to, you know, paper, check paper, and micker printers, which are like regulated, like people's access are regulated. So, like David, like from your perspective, like how do you think this? What's your response to people getting access to like micker printers and paper like this?
You know, it's part of the deal, right? I mean, people getting access to all this technology, people getting better and better in producing better technology, which allow them to bypass fraud. I mean, you mentioned washing. That was, I mean, and we've been studying this for a while. I mean, washing was the term folks were using at the beginning of this issue, right? We're talking about 2021, 2022. A lot of washing took place. We've seen a lot of criminals getting into Home Depot, getting mountains, right, of relevant liquids in order to wash the checks. But then, you know, too much attention. They started to get too much attention for that, so they had to sort of shift gears. And so instead of washing checks, they transformed into cooking checks. And so we started to see many people using Photoshops and getting access to all the printers and all the relevant hardware in order to cook very high quality checks. And so again, to your question, that is to me speaks volume to the constant evolution and adjustment that the criminals do in order to get better at better in their profession, and you know, get better at better in stealing money.
And what do you think what have you seen also like the way to defend against that from just an industry standpoint? And Tyler, I'm going to ask you the same thing from you afterwards.
So I know that there are different technologies out there, different companies producing different technology aimed to detect fraudulent checks. In the context of cooked checks, I'm familiar with a few technologies. So, you know, and I'm sure that you're going to mention a few of them. But, you know, one important thing to emphasize is that, you know, stealing money using one check or few checks is just one, and defending against that is just one issue that the banks is dealing with. I think that beyond that one check, there's a lot going on in terms of stealing the victims' identities, stealing the payor, the payee's identities in order to work with the checks, in order to open new bank accounts and deposit those checks, in order to, you know, create and manufacture fake driver licenses. So, you know, in terms of technologies, there are technologies out there which are dedicated to detect the fraudulent checks, but, you know, more need to be done in the context of the ecosystem, because beyond that single check, there's a lot of activity happening in the ecosystem along with that check itself. So hopefully that makes sense.
Yeah, it does. And, you know, Tyler, not to give away trade secrets here, but like, what are some of the detection techniques that you know the industry uses against some of these approaches?
Some of these checks that we end up seeing downstream, it's unbelievable. I mean, like David was saying, you can't tell, right? Some of them are so expertly done that check looks like a good check. And we've seen it in the treasury space, especially like the treasury checks they are impossible to detect. You put it next to another one and they look the same, right? They look perfectly good. The techniques are just that good. So it's one of the old saying of trust but verify, right? I mean, treasury checks were a challenge, I know, for us and others in the industry where it's a government check, right? So it should be full funds availability. And there's payroll checks and other business checks. And those are the ones, right? Cashier's checks. Those are the ones that are risky, but there's ways to verify them. We've had issues with treasury checks where you go and verify it on the website. And essentially it comes back as, yeah, that's an outstanding check, but the name's different and you can't validate the name. So, it's the trust but verify and using extended holds when in doubt of collectability. And that's where really KYC and knowing who's doing the transaction matters, right? If this is someone that, you trust, you've seen them in your branches, it makes a big difference, as far as whether you're going to place a holder on that check or not. But ultimately and that's where you have to rely on frontline staff, and education is just crucial. And it's really hard to do with a big branch network.
Yeah, that makes sense. That education and that kind of the KYC is a really important thing too. It definitely makes sense. And from like a consumer education, like how much do you spend and really think about like educating your actual consumer base?
We focus more on the scam aspect in general, and checks are a big part of that, right? So whether it's romance, job scams, there's a lot of digital attempts, right, to kind of perpetrate that, but they'll also mail out checks, right? They'll offer loans, and there's just all sorts of scams that involve checks as well. So we look at it holistically and just say we have to educate people that someone's going to try to take advantage of you, right?
Yeah.
As far as like going through the, kind of the USPS aspect and, checks in the mail and all that, we kind of shy away from trying to educate on that just because it's really hard to do, right? If people if they're used to paying with stuff through the mail and sending checks to pay their bills, it's just really hard to break the habit. And until it happens to them, it's like, oh, it won't be me, right? That's someone else. So we tend to avoid that and focus really on the scam aspect and try to keep them safe from someone that's going to intentionally try to defraud them.
That makes sense. Well,
I think.
Oh, good.
Just to add to that, I mean, I think that it's really important to convey to customers, right, the different risks that they take while using different technologies. So sending your check over mail is just, and someone stealing it is just one potential risk. But we've seen, and we actually were involved in many operations where we're able to see checks coming from car agencies, right? People put their deposits, right, on a new lease or a new car using checks. We were able to see a lot of checks coming from those agencies, right? I mean, so I think the important thing to convey is that to the customer is that there are certain risks for different ways of you opting to pay someone. You need to be aware of them, and then based on the risks and your appetite for risks, you need to make a conscious decision with respect to how you want to make a payment. So it's not only just mailing checks; it's also giving checks to your car dealer. Knowing that there's a lot of information on the check out there, which potentially could end up in the wrong hands.
That sound. All right. Well, let's jump into a couple of different, couple more terms. And so one is you have examples of a slip and a forged endorsement. Effectively, these are the terms that may sound a little benign, but definitely represent a lot of risk. And a slip refers to a counterfeit check. And once the fraudsters sell it, then they delete any trace of it. Forged endorsement's a little bit different, which involves illegally kind of modifying the check's endorsement to deceive the bank or the credit union. The interesting thing that I'll call out is the economics on each of these. Like the one on the left, like they represent like how they know how much funds are available in the account. So like more highly likely to actually clear. And you can see like one is worth 19,000, and so it's going for more money because there's more money in the account. But the one on the right has 300,000 in the account, so it's definitely selling for more. So just interesting that they're able to pull this other information into kind of how they're selling these checks to give people kind of more likelihood that they're going to actually be able to receive the funds. And so, like, Tyler, from your perspective, I mean, you mentioned like how to protect against kind of sophisticated fraud. You talked about KYC, you talked about kind of stepping up and waiting for the funds, but like anything else that you could think about just minimizing the damage of these things when you do see them come across?
Yeah, I mean, I think, you know, in these check examples as well, and the known availability is scary because they have a way to validate that information, right? And whether it's through, they start with the check and then they start pursuing an account takeover of that institution, or they start looking for statements depending on if they're getting out of the mail, right? Like they're validating it somehow. And the concern on my end is always how much information do they have, right? And in this world where it's so accessible to share information, to get looped into these schemes, people with privileged access, right? It's just the reality that we face of having a large amount of employees that have access to consumer information. That's a risk for us, right? But validating this information, so making sure, again, like holistically, do we know who we're doing business with? When they're interacting with us online and digitally, do we have controls in place to understand when that pattern changes, we detect it then and not when this check shows up for a much larger amount than it was originally written out for, right? So it's the whole end-to-end understanding who you're doing business with and making sure that all the channels have to be in sync together. One weakness in one channel will allow this check to pass.
Yeah, it's really actually really interesting. Like, David, from your standpoint, do you see this pretty often, like where they're providing just the additional information to help validate the economics of the check and like being able to bump up the cost?
Yeah, I mean, so at this point, and you know, I'm saying at this point, I think we actually realized in 2022 we're dealing with a very sophisticated supply chain of stolen checks and forged checks. I mean, we were dealing with organized crime groups, crime syndicates who has tentacles all over the place and are able to get the check, wash it or cook it, take the information from the check, moving it out to the next actor along the supply chain in order to cash it or use the identity in order to open a new bank account. And then to the next players who can then create more damage. What we're looking at right now, and again starting in 2022, are a lot of insiders who work for those organized crime groups. We have a lot of evidence suggesting that those checks, and again starting we have checks from 2021 being offered for sale along with Social Security numbers and available balances on the checks, coming from criminals who explicitly mentioned that they have insiders in all relevant financial institutions. So, unfortunately, we are dealing with a very sophisticated supply chain. We're dealing with crime syndicates who has a lot of insights over the way we're doing banking, the way FIs are doing verifications. And that is what we're dealing with. I mean, I can tell you that now we're at a point, I mean, you're talking about known availability. I can tell you that the criminals now feel so comfortable with the checks they sell you that they will tell you that, if the check doesn't work, you'll get a refund. This is where we at right now in this ecosystem. So, known availability and full Social Security numbers. When we talk about companies, we're talking about full employment identification numbers as well, which are being offered for sale along with the shells. It's just one interesting aspect. Now we're talking about refunds for checks which did not work. So, really interesting sort of ecosystem to work with, and, all available out there for us to sort of understand and try to sort of disturb.
Well, you're running an enterprise, company. You more or less need to provide, guarantees on the product that you're selling, I guess. So, that's what
guarantees. And again, a lot of complaints. Folks at the beginning, folks were complaining about the prices. So the prices you're seeing on the screen right now are fairly high. At the beginning of this, folks were selling checks, like personal checks, for $125, business checks for $250. And again, depending on the season, tax season and other season, prices were flat. And of course, the balances on the checks prices were fluctuating, and the customers were complaining. And there's a really, I don't know if I posted, there's a really cool rant from one of the stolen check providers, talking bad language, right, to folks who try to negotiate with him and try to lowball them because they are taking all the risks. And at the end of the day, they sell the checks for reasonable prices for the criminals to make not thousands of dollars, but tens of thousands of dollars, right? I mean, so, the ecosystem is very live and very cool to sort of understand how these guys are thinking of things, how much money they're making out of these types of checks, and the type of information that comes along with the checks. So
that's the U.S. It's a capitalistic country, right. So you got to get feedback on your product, and you got to negotiate those prices. Good microeconomics in play, I guess. Yeah. Tyler actually was talking a little bit about like identity verification. Do you see that in the industry as like kind of a key aspect of defending against kind of fraud too? Like being able to just, if you have strong KYC controls up front, and you can verify the identity both when you open the account, but also throughout the life cycle of the account. Do you see that in the industry as like a best practice, or do you see other things?
I think it's an important practice to verify the identity of folks before you open bank accounts or establish a credit line for them. That goes without saying. Of course, looking back at their history, understanding who they are is key. Making sure that the identities which folks are using to open bank accounts are legitimate identity, not stolen identities, not synthetic identities. And so in that sense, in my book, it makes a lot of sense to go back, understand the history of the identity you're working with, even if it's new, and then make a decision with respect to whether to open a new bank account or not based on your assessment of the risk around that identity.
Well, I appreciate it. It's good insight to the, again, how these fraudsters are creating a marketplace for themselves and getting the feedback. So, all right. So let's jump into the next one. So going to talk about a couple of terms. One is a drop account and one is around mules. So drop accounts, effectively the account that you use to receive the fraudulent funds. And the walker is somebody who walks into a branch to negotiate the check. So more or less present the check. And I'm just going to show a quick video, and then I'll jump to a few questions. By the way, been pulling questions from the chat, so if you have anybody who wants to add more questions, feel free to do so throughout. Also, so this is more or less somebody creating a fake ID. It's the KYC thing, Tyler, that you had mentioned, somebody being able to create these drop accounts by creating fake IDs. And so I guess David, from your standpoint, what are some of the tactics that these folks are using to actually create some of these drop accounts?
Yeah, I mean, the drop accounts are a big deal right now, simply because at some point in 2022, the criminals had a lot of checks, and they had too few individuals or too few mules to actually go in the bank and cash those checks for them. So they had to come up with a way to access some of the money. And that is when we started to see more and more drop account vendors out there. So individuals who offer the service of opening a bank account, a mule account, for you to use. It started with individual personal drop accounts. At some point, it moved on to open business bank accounts. We're seeing LLC, we're seeing PCs now. So folks are creating, legitimate companies, fictitious companies. They get all the documents they need for the company to actually create a new bank account. They take all the documents, they go to the bank, and they open a bank account with stolen and synthetic identities. At some point, or in many instances, we see the criminals actually stealing companies' identities, right, and opening bank accounts, to those companies. And then depositing a lot of money in those drop accounts, right? In the context of drop accounts, we see a lot of activity drawing heavily on the supply chain of stolen and synthetic identities. a lot of manufacturers there of stolen identities, folks who fetch the stolen identity and then offer it for sale, but a lot of producers who would do what you're showing on the screen right now, who would build a facade around an identity by manufacturing a fake driver license or a fake passport, manufacture very high quality utility bills, which then you can use and go to the bank and open a bank account with those documents. The quality of these documents is very high. The video shows the holograms folks are using in order to embed them on driver licenses and passports. We're seeing those driver licenses, fake driver licenses with all the relevant controls on them, driver licenses which could be scanned, passports which could be scanned and fetch all the information about an individual. And so under the circumstances, you can think about a bank teller sitting there, in the bank, reviewing all the documents, trying to make sense out of the authenticity of the documents. Everything looks legit. And so, it only makes sense to open a new bank account to those individuals. This is what we're dealing with at this point, and it's kind of scary.
I think Tyler, I think David just described kind of your day in the life of trying to fight fraud at your institution. Does that line up?
Yeah, I mean, we see all this stuff. I mean, it's one of those things where we're all fighting, right? All financial institutions are fighting for a better customer experience to attract the next customer, right? Everyone's trying to grow in the digital space. There's a lot of, right, even if your institution has a lot of really tight controls, there's a lot of other ones that might not. And you look at the prevalence of banking as a service and all of these other just services that continue to come out. It's kind of the point where that there's IDs that will pass just about anything. And even with all these controls and all these providers that will scan and everything else, you look at a lot of big providers and they're not even collecting. If your information passes some of the initial KYC checks and there's no friction in your application, they won't even do ID verification, right? You can bypass that whole process because I think there's, to some point, a lot of institutions look at it and say, someone can always produce an ID, right? So what's the point in collecting it, right? Unless there's friction that I can see in the application and allows me to have a higher degree of confidence to decline it. But a lot of people can open up accounts at all the big banks, all the fintechs, right? And do it pretty frictionless without even providing an ID. And I think there's just we've kind of acknowledged that you'll be able to produce it. And this is, again, where it comes to what is the activity on that account? Why do I trust you? You just open an account here. Why am I going to give you all sorts of cash app limits and POS and an instant debit card? And right, we have to monitor that activity and try to be in control of that because this stuff is only going to get better. It's already bad. We see perfect IDs with images and everything else, and they can open up accounts. And you really just have to have back-end controls because they'll find a way to open the account. You'll stop one avenue and they'll find 10 more.
It's interesting.
But
go ahead, Dave. Yeah.
Yeah, I just want to, add that, we see folks opening the accounts and then we see folks maintaining the accounts for a long period of time. So the KYC, I mean, the processes there are very important, of course. But, fraudsters are always, I think, few steps ahead of us because, we all know that the banks monitor the new account for a period of time. Criminals know that as well. And so we're at a point where the criminals offering aged account for sale, aged accounts which bypass the period of monitoring, which include few transactions on them, which includes synthetic or stolen identities document, which will be provided with them. Sometimes those accounts are being offered for sale along with the phones which were used to open those accounts. So again, I mean, when we talk about KYC, it's really important for us to understand that this is already out there and the criminals are already trying to bypass this technology. And so, we definitely need to give more attention to, verifying folks' identities before they open the account, as well as look at those accounts we created.
Hopefully you guys didn't hear that. My phone ringing while we were talking, but it is interesting. So a lot of these fraud, I've been in payments for 10 plus years, and the IP address is always one where a lot of organizations look at if there's a change in IP address, or if there's any alteration, somebody's like username and password. So if you can create that full synthetic profile, That's pretty impressive and scary. And Tyler, what you were saying, sounds like it's a little bit, unfortunately, it's like a little bit of like the cost of doing business sometimes when you're thinking about taking that higher risk, especially if you're just trying to like onboard new consumers and grow your consumer base. You're going to take on that like heightened risk for sure, which is, I know it has gotten some neobanks and other kind of newer banks in trouble. So hopefully people are thinking about that right balance of the assuming the risk, but also bringing on good customers that will be there for a while. Well, listen, let's jump into like the next section, which is talking about mail fraud or mail theft. We talked a little bit about it at the beginning with some of the stats, but what I want to show you in another video. But this one is about the arrow key, which is the U.S. Postal Service, more or less universal key that opens up kind of all mailboxes within a certain geolocation. And so what you can see on the left is more or less a digital printer, and also in the middle, I'm going to play a video here of, pops up, there it goes. So the audio is great at this one, but we cut out the audio. It was a little spicy. But also somebody selling these arrow keys, effectively allowing somebody to open, mailboxes, like I said, within a very specific geo to get access to not just like one or two mailboxes, but a bunch of different mailboxes in a certain area. And like I said digital printing, not 3D printing. Like they're actually using 3D printers to create these keys, and these can go for a lot of money, which you can see on the right. So I guess for like Tyler, how do you think about mail in banking operations? I mean, it's kind of like, let's go back in the age a little bit, like operations, mail. How do you evaluate like and ensure that you're protecting against kind of these things where like it can be really proliferated with just one of these keys being accessed by a fraudster? Like how do you think about the security posture in your credit union and how to protect against these type of scams or these types of attacks?
Yeah, I mean, we're even guilty. We were talking about the prevalence of checks earlier, and people have want to pay with checks, right? And we even do the same thing. Like we'll overnight funds to dealers, right? In the FedEx envelopes, and those are vulnerable to this type of attack, and those are our cashier's checks, right? So it's partly, that's why we look toward technologies like what FedNow can potentially do for us in the future on weekend settlements and stuff like that. But yeah, I mean, it's so accessible to get checks, and you think about how you introduce funds into we can create accounts, and there's this whole network of fraud, right? But you either get funds through an account takeover or checks. Checks are the perfect way to introduce new funds into the ecosystem without having to go through account takeovers in order to get those. You can essentially create funds using it. So that's why it's going to continue to be it's so important to get good checks. And like David's been talking about, it's so easy to wash and make those checks look just so good that, right, the fraudsters are going to find a way to extract funds from them.
And Dave, for like these technologies like 3D printing, like how widespread do you think this is? Is this a real concern? Is it just like a nuance? Is it an emerging trend?
Well, I mean, it's part of the evolution. I talked a lot about the evolution, and during the last 3 years, we see things evolved. At the beginning, we haven't really seen a whole lot of arrow keys being offered up there for sale, but at some point, 2022, we started to see more and more of the arrow keys and the videos you just showed. But then at some point, like end of 2022, you started to see a lot of replicas. So the criminals were creating replicas, not necessarily 3D printing them, but creating replicas. There are a lot of really interesting replicas out there being offered for sale for a wide range of prices, starting at $1,000, getting into, I've seen $7,500, and it really depends on the number of USPS mailboxes that the arrow key can open, as well as the neighborhood, like how lucrative the neighborhood is. The 3D printing is definitely something we started to see emerging around mid-2023. And yeah, it's a concern. It's a concern because if you look at the slide right now, and you have a criminal looking at the slide right now and taking a snapshot of the criminal, they can actually take the video, take the picture, go to the printer, and manufacture a 3D arrow key simply by looking at the picture or taking the picture that we're showing right now. So we're seeing more and more of that happening. So it's a real concern. Yeah.
Oh, interesting. Well, talking about mail fraud, we're talking about innies. And this is going to be kind of got only a few slides left, but so an innie is effectively a person who works inside like a bank or credit union or an institution that has access to these checks, so they can perpetrate. They can work with fraudsters, or they're working actually at the postal service. And so here's a couple of examples of. I'll show a couple of videos here. Effectively, in this video, somebody showed up early to work. They got there and they said, hey, listen, they're taking a video of all the access they had to all these mailboxes. They got there at 7 a.m. So they were pretty proud of that. And they have a bag full of checks ready to roll, which is kind of crazy. So this one's going to wrap up, but look at that bag. It's chock full. And the next one is kind of the same, right? It's like somebody working inside to collect all these checks. And the crazy thing is, what fraudsters are like, the people they're working with are paying them like $5,000 to $10,000 a month for this, just to get access to all these checks and steal these checks and hand them over to the fraudsters. And they're making $17 an hour. So like the economics are definitely there for somebody to work with fraudsters, which is unfortunate, right? Like that's somebody who has access to so much of this supply for the fraudsters is kind of scary. And I think for, like David, from your standpoint, like what like these communities that foster getting people in, like innies, like what's your thought around this? Like, is this like, what are you seeing in the industry? What are you seeing in your research? I think, some of these videos are really crazy.
As I indicated earlier, we are talking about a very sophisticated crime syndicate at this point, with tentacles all over the place. You have insiders working in relevant places, which allow you to fetch the checks. Then you have insiders working in relevant places, which allow you to fetch information about the victim you're trying to victimize. In the context of the two videos you just showed, the first one indeed shows where the criminals are essentially taking the checks from. The other one is showing what they're doing with the envelopes they steal. And again, it's part of the supply chain, because once you get all the envelopes, you need to do something with them. You need to go through the envelope. You need to sort through them. You need to find the checks. You need to, find the relevant checks you want to work with, whether it may be personal checks or business checks or IRS checks or debit cards, whatever you're looking for. And so the second video essentially showed the hideout location, where the criminal essentially chauffeur all the envelopes to, where the rest of the gang awaits, and they all sort through the envelopes, look for the checks. Sometimes they hire a few drug addicts to help them sort through the mountains of mail they're able to bring in. They pay $100 a night along with the Wendy's meal, and they're able to get all those checks that they can then start working with. So as I mentioned earlier, at this point, we're not talking about one or two individuals who are doing this, as a side job. We're talking about crime syndicates with designated roles for each actor along the supply chain. And, unfortunately, we've seen that spreading across the United States during the last 3 years or so.
Interesting. Not to talk about the enterprise approach of fraudsters, but, outsourcing to lower cost workers too. I can, other than price pressures from their consumer base.
These guys are business people. We have to remember, these guys are very rational actors. They identify a loophole. There's no vacuum, and there's, no guardians and no deterrence, right? And so they step in, they take everything they need, and they try to make money out of it. That's just as simple as that.
That's true. It's true. And Tyler, you oversee obviously a broad institution. How do you protect your credit union, or how does the industry protect themselves against these insider threats? How do you think about that?
I mean, this is the stuff that at this point keeps me up at night. There's some other things, but this one definitely does it. It's right. We look at applications like Telegram in, right? It's bringing the dark web to every user to some degree. It's just in a prettier format, right? It's very easy to become a criminal. It's never been easier to monetize privilege access, right? That's what these tools unlock for people. The other piece about it is that I may have privilege access, but I don't want to do any other perpetrate fraud, right? But I can find a way to monetize that access. And there's every piece within this ecosystem has a participant, right? And if you're missing a piece, you can go and find them very easily, right? So it's really easy to plug and play within this ecosystem. And the vulnerability for us as financial institutions is we a lot of times have ways to detect this, but we don't have preventative controls around employee access, right? We think of our call center reps, we think of our branch employees. Part of their core function is to be able to access accounts, right? So there's privilege access that is just part of the job. And if there's losses down the road, you can typically backtrack into it, but it's really hard to get in front of it. And I think also just people don't realize that you'll get caught, right? And I think there's a lot that probably don't get caught, right? But there's also the chance of being caught, but there's just that fear is almost gone because I think that, again, it's just so easy to create this narrative that you're not hurting any individual, right? And they won't catch you. It's just a couple accounts or something, right? And it's only the bank that's getting hurt, or the financial institution, right? And we know for a fact that people are willing to scam people and hurt them. And that's a whole different subset of individuals. Then you have groups that you're only hurting the bank, right? So it's really easy to create a narrative where there's no harm, no foul, right? And that's where your employees are vulnerable and people with privileged access are vulnerable. That's
interesting. Yeah, that's interesting. The interesting is like when the decision matrix that you have in your mind of like when to go after the funds, or even like when to provide the funds back to the consumer. Like is that pretty standard across the industry? It feels like it's not standard across the industry of like how organizations are treating kind of refunds and protecting consumers.
Yeah, I think it's supposed to be somewhat standard with the various regulations. I don't think it always is. Circumstances vary so much that there's a lot of gray, right? And everyone, I think, handles it differently. And that's where there's a lot of communication between institutions. Unfortunately, when that communication happens, someone's holding the bag. And really the communication is around, well, who's going to eat this loss, right? And it's making an argument as far as, well, what did I do to protect my funds? What did you do to protect your funds? And whoever's on the opposite end of it ends up losing. But I do think it's handled differently. The way that we kind of look at it is authorized versus unauthorized, where you were a participant, where you duped into something. So those are kind of like the areas that we start to look in. But it's hard. It's gray, and all the circumstances are very different.
Yeah, interesting.
Wish I had a better answer.
No, that's all right. I kind of figured that was the response. All right. Well, listen. So that kind of wraps up our video session. So I'm going to talk a little bit about Unit21 for maybe 45, 50 seconds, and then we're going to jump into a Q&A, which the team has been queuing up for me. So I've got some. I've been trying to ask some along the way, but just to give you a sense of a little bit about Unit21, we're here. Our vision and mission here is to stop bad actors, to help deliver justice and safety to the world. So we work with hundreds of clients, and we have for years. Many of those clients are some of the brands on the screen. So thank you, Tyler. Appreciate you and your team, but also many other banks and credit unions in the industry. And check fraud's really one of those things that we are focused on. We have a full product roadmap, not just, but focused on fraud, of which check fraud is one of those. And the way that our platform, Unit21, which is attacks that is, we think about check fraud from an investigation and prevention standpoint. Some elements of our products are, we have dark web monitoring. We looked at obviously some of those stolen checks. We have access to the dark web, so we embed that into our platform. Check fraud rules, so effectively doing transaction monitoring with these checks such that we can detect fraudulent checks within minutes. We also have a full case management aspect, which is an investigation toolkit, and so we can centralize a lot of the workflow and automate the historical transactions and being able to allow the analysts to evaluate the checks. And then we also have ride-along AI agents for instance investigations. So hopefully look at the data provided by the check and provide kind of insights and action suggestions to the analyst, all in the effort to prevent fraud. So one quote from one of our customers, from Joe, who I've been on a webinar before with, and who's lovely, from Third Coast Bank. Effectively, they turned on the rules and turned on the capabilities from check fraud, and were able to prevent $50,000 right away. So we're excited about, I guess, we see this as opportunity ourselves, and obviously check fraud rates continue to grow. And so we want to build products to help financial institutions protect themselves against that rising tide, unfortunately. So next, I'm going to jump into, this is a little bit of video of our platform itself, of the AML and fraud platform, of which I just mentioned, dark web monitoring, rules, templates, investigation toolkit, and AI. All right, so Q&A. So I talked a little bit, and one of the questions was, how do financial institutions decide when to actually provide protection against consumers and provide the funds back? But we kind of addressed that a little bit. Another one I'm seeing is the AI. So I just mentioned we have a little bit of AI. How is AI being used to fight back against fraud that you're seeing in the industry? And Tyler, I'll ask you the same question.
There are different uses for AI to deal with this issue. I'm not an expert in how the AI technology is being used in the context of this specific issue. But I can tell you that at this point we are seeing more and more criminals using the AI in order to try and bypass some of the AI technology that we are trying to develop. So
Gotcha. So the counter argument. So AI is actually using a little
exactly.
bit. Yeah. Sorry. Tyler, anything that you're seeing in the industry around AI and how that's helping prevent against other people using AI to perpetrate check fraud, I guess?
Yeah, I mean, I think it's going to end up being, if it's not here now, in 2 years, it'll be AI versus AI, and we'll just see whose models are better, right? I think it comes down to the partners, right? I think we're starting to see a lot around in the AI space around anomaly detection. Some of it's pretty, I would say it's pretty weak right now. There's a few players in it, but definitely that's picking up. But yeah, I mean, it's going to be, when we think of monitoring for patterns and large data and trends, it's really hard for us to stay on top of our data and understand how quickly some of this stuff moves. I think what the videos and everything demonstrated is that the fraudsters are right there, and Dave mentioned this, they're one step ahead of us, and it's because we're dependent a lot of times on our core systems, our vendors, everyone that we interact and deal with. They're just a lot more nimble, right? They can interact just so much more fast. They don't have the same barriers that we do. So we're up against that. That's definitely a challenge. So it's really important to have partners that are looking at utilizing AI for anomaly detection, for patterns, so that insight, the fraud that's happening today that you end up seeing in your balance sheet 2 weeks from now, right? And finding that control and mitigating against it versus having a customer, God forbid, call you and say, "Oh, my account's drained," and you didn't know about it. Right, that's just the worst stuff. Using AI and those type of things would be great, but right now it's kind of it's fictitious. There is some of it, I think, right, and again, it kind of comes down to the partners as well to leverage that.
Well, that's great. Well, listen, I think we're kind of bumping up against time, so I'm probably gonna kind of wrap it up. I got one more slide, but before I jump to the last slide, Dave and Tyler, I really do appreciate you guys joining. You guys have some great stories and insights, especially, you've been in the industry for a long time, so it's always good to hear kind of what you're seeing out in the industry and also kind of how you're fighting against it. So really do appreciate both of you. A little bit of a candor conversation too, which is cool. So the last thing I'll just throw out there, Unit21, we have a Fraud Fighters virtual summit coming up in July. So we're really actually pretty fired up about this. We're going to be bringing kind of the best minds of AML compliance and fraud and risk into the summit. And what it's going to consist of is we're going to have some keynotes. We'll have some roundtable discussions, some tactical workshops, effectively bringing kind of the industry and some experts together. We're going to be covering fraud, AML trends, regulation trends, best practices, and hope to see you there. Please take a look at the QR code or follow us on LinkedIn. Again, thank you, Tyler. Thank you, David, for taking some time with us, and looking forward to working with you guys soon. And Mike, I'm going to hand it back to you to give us a wrap.
Great. Thank you, Ian. And thank you again to yourself and David and Tyler for great conversation, great insights. Ladies and gentlemen, that does conclude our program for today. We're glad that you could take some time to learn more about this great topic. Again, want to acknowledge and thank Unit21 for sponsoring our program today. We hope our audience, you will join us for future web seminars brought to you by American Banker and its partners. So on behalf of your host, your sponsor, and your presenters, thank you all for joining us, ladies and gentlemen. We hope you have a great and safe day. Take care.